You are listening to chartingwealth.com for Thursday, the 16th of February, 2017. As Confucius said, if you wish to divine the future, study the past. That's exactly what we do through studying these charts on a daily basis, teaching you how to do the same. What do we have going on with stocks? Well, the S&P 500 continues to bolt higher, as does the NASDAQ 100, as we see in the Qs, QQQ. Gold also moving higher, and bonds, TLT, down again. We continue to see bonds go down after the rise that had taken place previously. So we'll continue to walk through these things, look at all of the different indexes that we study, and give you the lowdown. Let's jump first into S&P 500. I've had several of you ask, what about simply jumping in at any point as it continues to skyrocket? Well, you can. However, we did not establish our vertical crossovers on the weekly chart until way after that occurred in the S&P 500, all the way back in, oh my word, in the month of, toward the end of November, right around Thanksgiving. That's when that vertical crossover occurred. We didn't really start using vertical crossovers until January, but it has gone up and up and up and up. We had our 2-day chart crossover back on the 9th, and of course we've continued. I'm sorry, that's the 2-hour chart crossover on the 9th, but what I've been waiting for was actually our 2-day chart to cross over. That finally happened on the 10th, and we already had the 2-hour chart moving up. We've not had a pullback, so our typical way of jumping into things has not happened. But folks, don't be so worried about the S&P 500. Why? Because we have been in the Qs watching this incredible rise from somewhere in the neighborhood, depending on when you got in. If you did the vertical crossover, you got in around 130, what was that, 120, 122, 123. And of course, it hit a high throughout the course of the day at 129. I mean, just incredible gains. If you jumped in later and you got in, of course, with folks somewhere around 124, 123, 124 on the 2-hour chart, when it crossed over going up, you have done amazingly well. We're continuing to watch these things bolt up. We keep giving the warning at some point it will end. So be ready to take your gains and move on. But man, it is just incredible. We see that the PPO, the price percent oscillators, moved even higher, and the derivative oscillators gained energy on the 2-day chart. So things are continuing to look nice. We're very, very happy with our returns in the Qs. Now remember, when the tide is rising, everybody appears to be a genius that's in the market. At some point, this will end. And of course, as we move to TLT, what do we see going on there? Well, we had our weekly crossover occur, and we're going to revert to our weekly chart at this point. We had the weekly crossover occur for the week ending on the 3rd, and we did have a nice rise the following week. We actually had a good initial jumping in point, and we had a nice rise up $2, right at $2, but bonds have since started losing that. We are seeing the derivative oscillator on the weekly chart has lost some of its energy, and even the weekly chart is starting to move flat. We will continue to watch, not giving up total hope on that yet, but if indeed it does turn around, we're almost to see a crossover on the 2-hour chart on bonds moving down. That's not a good sign if that occurs. And of course, for those of you who jumped in on that 2-hour chart, let's plot that and show you what you can and should do in situations like this. Because it's easy to make money when things go up. It's once it tops out, getting out at the right time. The jumping in point was around 1030, somewhere around 119 on the 6th. Now, that was the 6th of February. It shot up all the way to a high somewhere around 122.27. and then crossed back over going down somewhere between about 121 and 120 and has been trudging down since then, actually going below throughout the course of the past day, below the entry point. Now, we warned you yesterday it appeared to be heading that way. So what do you do? If you jump in on a 2-hour entry point, of course, you can jump out on that 2-hour entry point when it crossed back over going down. Now, again, if it peaked and then troughed and then moved back up again before the crossover, then of course you could hang in there. But once the crossover occurs, that is telling you that there has been a definite change in mindset in the market, at least on the 2-hour chart. Now, once it crossed over the 2-day trend line, that is another warning signal, warning bells going off. It's already past that. And of course, as we said, it's getting close now on the 2-day chart to crossing over actually on the PPO. So again, just pay attention to those warning signs as they occur. The biggest one, of course, well, right now is if it crosses over on the 2-day, that's a big warning sign. But once it gets down, the value gets down to where you jumped in, well, of course, that's an immediate warning sign. Get out at that point. And of course, you get it on a 2-hour chart. The 2-hour chart crosses over. Whenever anybody says, how long do typical runs occur? Well, if it crosses over on the 2-hour chart, it's going to typically move for a number of 2-hour periods. And in this case, it ran up, well, I could count those, what is about 10 or so. And then it crossed over going down. So it's usually not just 1 or 2 when it crosses over in either direction. It's going to be several. Same thing as to when it crossed over. It takes a lot of energy going in either direction to cross the PPO, that is the price percent oscillator. That's why we use it. And we saw both the price percent oscillator and the derivative oscillator cross over at about the same time. That also shows that there's a strong trend change. When that occurs, you've got the telltale signs. Take the profit you had and get out. Don't try to keep riding it down. Now, we will continue to watch. Guess what happens? Because the 2-hour chart's not crossed over yet. It's still going up. And the weekly chart is still going up. So what do we do if indeed we see in the next few days the 2-hour chart cross back over going up? You have another potential entry point to jump back into bonds and ride that up again, because both of your bigger charts are going in the upward direction. So just continue to monitor this chart. Don't give up on it yet. Okay, now let's go back to the 2-day chart, wrap things up with gold. Gold up 0.44%. Gold had fallen off a little bit. Remember, we had a jumping in point back around the 27th, and then the following, what would that have been, the 30th? And that was actually the jumping in point both for the weekly and for the weekly vertical crossover and for the 2-hour crossover going up. But then what happened? Well, gold sort of peaked out. Well, it did peak out around the 10th at 118.58 and then fell off since then, broke through the 2-day trend line. However, again, the 2-day chart is not crossed over. Check out what's going on the hourly chart. When it peaked out, the hourly chart rolled over, didn't it? Well, could have gotten out there, let gold drop back off, and then once it recovers, which it crossed over at the very end of the day. Now, does that mean you get in right at the end of the day? No, it does not. You need to wait and see how things shape up in the morning. If indeed this crossover continues to bear itself out and isn't absorbed in the morning, sometimes they are, gold rolls over and goes down, it may disappear. But if around 10:30 it is still there and looking good, of course, you can look to get in at that point, at 10:30, no earlier. If it's not looking good or questionable, don't get in at all. Just leave it be. Hopefully you already made a nice profit up to the termination point where things started to roll over. That was the morning of the 9th of February, a Thursday, and you've gone ahead and let gold bleed off all that energy. And then if you do have the chance to jump back in on the 2-hour chart, you can sure do that. Now, those who are trading longer, again, looking at the weekly chart, of course, what do we see going on with gold? It's continuing to build. It's continuing to stay above the weekly trend line, and hopefully that trend is still there. That's where we are as we get to the end of the day on Wednesday, the 15th, as we go into Thursday, the 16th. Hope that you are enjoying what we do. We sure enjoy bringing all this to you and looking at these charts every day and working on them. If you have questions, problems, concerns, you can always write us, cw@chartingwealth.com. If you've not already signed up for our newsletter where you receive these reviews every single day, you need to do so. The Daily Market Worksheet is available for everyone who subscribes for free, I might add. We'll send you that Daily Market Worksheet, a link to that. You need to fill that out every day. It'll supercharge your training. We've updated that recently. It includes the PPO now and includes TLT, the 20-year bonds. We also have available the How to Read a Stock Chart video, which comes with your subscription, along with our layout that we use at freestockcharts.com. That's what we got going on. God bless you guys. We will talk to you soon. You want to help us out? Go to Facebook, Instagram, YouTube, you name it. Subscribe to our channel, particularly at YouTube, and also go to iTunes. One of the biggest things you can do, you guys have made us as high as number 6 in the world in stock charting, stock market podcasts. We so appreciate that. Go to iTunes, subscribe, give us a 5-star rating, say something nice about us. You can do that on Facebook too. God bless. We love to hear from you. Take care from chartingwealth.com.